All right, guys, welcome to another episode of the Practical Wealth Show. So we're going to talk about, to show you what a nerd I am, one of my favorite numbers, which is money, operations, cash flow, accounting. Accounting is the language of money. And so it's not what you earn, it's what you keep. And Chris and Kira, and I was rereading The Richest Man in Babylon, and most people don't block and tackle. So that he says that the basics are: one, pay yourself first and spend less than you make.
Mm-hmm.
Right? That's like, if you can't do
Absolutely.
that, none of this other stuff works, right? Whether you're in business, whether you're personal economy. And so we're going to start with that's the basis, but now we're going to get into it with two experts. So let me tell you about my guest today. So I have Kira Wissman. She's a finance leader offering 20 plus years of experience in both private, public sectors. And her leadership style is collaborative and compassionate. So we like that. And but basically, she's an operations and leadership expert. So operations is, and I'll let her tell you what that is, but running the business. Is that operations, right? Mm-hmm. And then Chris is a CPA, certified public accountant for almost 20 years in the accounting and finance industry. And he works with mid-market businesses, variety of industries, professional services, technology. And what I want to do is I want to make sure that, there's the basics are the basics. So we're going to have some conversations around that. And I want you to pull out of it what you need to get better at your craft, to get better at your numbers. And so, because business is business, I don't care if it's big or small, it's all lead generation, lead conversion, lead fulfillment, right?
Sure,
so
absolutely.
I don't care if you're a Mary Kay, right? It's the same thing, right? And so you got to learn how to manage your money. So, guys, welcome to the show. Tell them what I didn't tell them, and then let's help these people make or save some money.
Sure, absolutely. Kira, do you want to?
Sure, I'll kick it off. So, like my bio says, I have been in a combination of public and private sector accounting for over 20 years at this point in my career. I kind of bring a unique skill set to the table, I think, by having experience in both. And, it's difficult to speak the language of accounting and then speak the language of non-accounting people who love business and operate businesses. And just through my own experiences, I've kind of been able to bridge that gap in a very plain language way so that I can translate the financial information to the non-financial people and translate that non-financial business acumen to the financial people and make everybody come to the table and really understand how we are working together gets us the best result.
It's great. I'd say for me, almost also about 20 years in finance and accounting, really helping support businesses. There's a lot of different pieces of what a CFO might do. There's reporting and operations and compliance and all those pieces. But at the end of the day, where I see a lot of value is, I'm sort of your finance coach for the CEO, like the owner. I'm here to help you understand how the machine works, help you make better decisions. And so your data, the data is right, and then sort of interpret the data the right way to make better decisions. Ultimately, that's what it comes down to. You don't want to be in the weeds. You don't want to be looking at, this transaction, that transaction. You want to see the forest, not the trees, and understand sort of how to drive the ship. So that's where we see ourselves as really adding value, is to help coach you through some of those scenarios. We do scenario modeling where, we talk about, okay, do we want to invest in this? How about capital allocation? How do we want to move the money around so that we can best optimize? Do we want to look at these projects and say, this is profitable, this is getting better ROI, how do we want to reallocate, all kinds of different decisions, but basically helping you make better decisions. That's sort of where we add value.
How do y'all work to get same company? How does that interplay work with operations, the accounting? Is it y'all are doing different things for the people that you interact with or looking at differently? How does that work?
I mean, I think that every client's different with what they need. So it depends on their needs. Sometimes they just want us to come in and do their books for them and leave them alone. That's good work to do. But, I think where we can add value is where we can dig in and really get there at a deeper level with your business, both on the operation side, finance, just understand everything, because then we can make actionable decisions. Help you make actionable decisions. When we have our hands wrapped around everything, we can really help you see the whole picture, because we're not just in one piece of the business.
What are some of the y'all could and just jump in and answer. I'm gonna throw some questions out there.
Yeah.
What do CEOs, big or small, need to know about their financials, in y'all opinion?
I think understanding that a profit and loss statement an income statement doesn't necessarily indicate that if it says you're making money, it doesn't necessarily equate to you have that amount of money to spend right away. It doesn't necessarily equate to the cash in the bank. Understanding why. We help with that. We coach to that constantly. It's a concept that is often very difficult to understand. And you kind of need to know what you have and where it is. At the end of the day, you have to know what your assets are, what your cash is, what you're spending your money on, where you're earning your money, and be able to take all of that knowledge and apply it to your vision for the company. And if they don't mesh, then you've got to be able to sit down at the table and start digging into those details and figuring out what is throwing off the vision.
I would say, if we want to get a little bit granular, I'd say you need to have a cash flow forecast, like a 90-day cash flow forecast, understand exactly where the money's coming in and understand exactly where the money's going out. Mm-hmm. And as you do that, especially with the weekly level of granularity,
right?
So first you're doing a projection. So you're projecting out 90 days, and every week you go back and say, where did I miss? As you do those iterations, you realize where your assumptions are wrong. And so you get a lot more visibility into the business as you go and basically fact check your analysis. So that's one thing I would say, that CEOs don't necessarily need to be doing the work, but they need to be looking at that on a weekly basis.
Say that again. Weekly basis.
Weekly cash flow projections. So you should have a longer term plan, a year out, 3-year plan. That's great, but you need a 90-day visibility into what's going on with your business. I would also say that you need to understand the drivers of your business. Where are your profit centers? Where are you? If you have 3 projects or three divisions, is one getting a 10% profit margin? Is one at 20? Is one at 50? Where are the profits coming from? And then I would also, I guess to some extent, the important piece that I would drive home to business owners is you really need, it gets a little bit granular again, but you need to do a break-even analysis. You need to understand what your fixed costs are versus your variable costs. And so what is that? If you're not profitable yet, what is your break-even point? Where can you, if you add revenue, drive more profit? A basic break-even analysis of looking at your fixed costs and your variable costs is really, really helpful.
And for a startup, I think we should take an example of somebody, an everyday person who might want to start a business. You referenced Mary Kay. There's other, Avon, Tastefully Simple. You see a lot of people that get sucked in by these sales models, and it almost can become like a pyramid scheme at some point. I think some of them flat out are. But, being able to do that analysis that Chris just talked about is really important. Hey, I want to sell Mary Kay, or I want to sell Avon. And, somebody has approached me and said, you can, eventually you're going to be driving a pink Cadillac. And, it seems pretty easy to get there. So, you have to say, all right, I need to invest. How much do I need to invest in this product? And how am I going to go out and sell this to people? And how long can I survive with what I have after this investment, without bringing a lot of money in, because you don't necessarily have a customer base yet. You have a dream. You have something you want to go do. You have something you feel you might be good at, and you have that seed money, but you don't necessarily know how to look ahead and say, okay, I've invested $10,000 here. I expect to sell X dollars in product over the next weeks, months, whatever you want to go. Do I have money in my bank account to sustain myself?
And nobody does that, right? Well,
afraid. I mean, I think
Right.
people are afraid. I get afraid. I don't like to look at my bank
So
account.
here's the thing I would also say is that you do that projection. This goes back to that like weekly cash flow.
Yeah.
You're going to be bad at it when you start.
Yeah.
You think you know where the numbers are going. You don't until you do it for a while and you really, really see what's actually happening at the detail level. Your assumptions are wrong in at least some places, and at least knowing where your assumptions are wrong really help you hone in on it.
I have people that I'll look at because I grew up. Well, not grew up. I was probably in my late 20s. We had a supermarket growing up, so I grew up in brick and mortar. My dad had a supermarket, and then I got involved. Now by 21, I kind of was in my financial services business, but I didn't know how to run the business of financial services.
Right.
I was just selling insurance and mutual funds and
Sure.
that kind of stuff. And then we got into the tavern business. So we had at 1.3 bars in Philadelphia, and I had a crash course on inventory because I had this coffee shop owner. I said, "Well, you talk to your accountant?" No. She had a partner. Do you look at your profit and loss? No.
Right.
Like maybe once every 3 months. I said, "Are you kidding me?" I was like, if I didn't do my numbers every week,
right.
Because in the bar it's so easy to steal. Like, so that's why I started to understand inventory control. And I
Oh,
was like,
yeah.
okay, I've sold $1,000 worth of beer. I should have $4,000 if all my beer is gone. Right.
Yeah.
And so every business has that, and you have to know that stuff and the price levels, and they don't do that. I'm like amazed.
So here's the thing that I think is really cool with where we are with business
I
nowadays.
told you I make accounting sexy.
Yeah, absolutely.
It's fun. See, that stuff is fun and important.
So when I got out of school, where the way accounting would work, at least you'd have your monthly activities, right? All the things happen, all your transactions happen. You do a monthly close, and an owner might get financial statements the second, third week after the month. With technology nowadays, we can do real-time closes. We can do daily reporting. We can get data points almost in real time. And you can make actionable decisions without having to wait for the data to be stale by 30 days. You can see what's going on in real time with your business. And that's where we think we can add value, because that's that business 1.0 where you're seeing things in a rear view mirror 30 days after the fact. Now you can not only see it in real time, but there's so many tools out there. You can start to do a lot of good projections and see 30, 60, 90 days out where you think you're going to be. It's like it's instead of driving, looking in the rear view, you're looking forward. And that's where you start to make better decisions.
Yeah, that's so funny because we have a process we teach called cash flow mapping. And our tagline is tell your money where to go instead of asking where it went.
Yeah.
Right. Budgeting is like driving your car looking through the rearview mirror.
Right.
But
that's it.
Equated to personal finance, right? But even at the business, you need to know the P&L. Kids, I got a question for you. But that's still looking at history.
Right.
So you need to know that, but that, they don't use their numbers, which is what I try to get across, as a planning tool. Looking forward, assigning each dollar a tag.
And that's what you got to do.
Yeah.
I mean, if you're not doing that, you're missing half of the picture, if not more.
And it's easy to not be honest with yourself looking forward too, which is where somebody with expertise in the field can really help you. Hey, what do you want $10 million by the end of the year? Is that realistic? And you look back to look forward, but you have to.
I'll say
you have to be able to be really honest with yourself.
Yeah.
I'll say the biggest piece, I think, in my mind, is to close the loop. You do the forecast. When actual results come in, you compare against your forecast because, were your assumptions reasonable? If you're talking about a personal investment, what's your projected ROI or rate of return? Are you projecting 7, 10%? Are we actually in that environment? You need to stress test those assumptions too. So that's really important.
Yes. We have to figure out how to help people do this. All right. So Kira, what my mind is exploding right now. I got all these questions in my head, but I want to go back. I want to talk about the balance sheet, business owners keeping their receipts and identifying personal and business expenses, the importance of that, how you help people do that type. Because what I find is people commingle.
Oh, terribly. I mean, it is a battle all the time. Even with our clients, if somebody starts a business, they don't understand the importance of separating your personal life from your business life, and you can't get an accurate picture of what's going on if you're running your house utilities and your hair
Right.
appointments and whatever else you might be spending for your personal life through your business, thinking, well, that's where the money's coming, so what does it matter where I pay the bills? And it certainly does. And that's why, Curtis, when you said at the beginning of the show you have to pay yourself, and that's what you should be doing. You should be paying yourself out of the business and then paying your personal expenses out of what you've paid yourself with. Keeps
Yes.
you honest. It allows you to budget for your personal life. It allows you to see if your business is making money, it's often hard. I just had a friend asking me some questions. A family bought an ice cream store, or a couple stores, and they were just using their personal credit cards to buy everything for the ice cream store and their personal lives. And they had no idea why all of a sudden they had no money, because they hadn't been doing that due diligence. They hadn't been keeping things separate. So it's extremely important to operate the two like completely separate units.
Right.
Yeah. And to the extent that you need to take money out of the business for personal expenses, just run it through as a distribution and then take that money, move it to your personal accounts, and then pay whatever you got to pay. I mean, really, as much as you
So
can.
whether they're Schedule C, S corp, whatever, like you can,
I would recommend that as best practice, generally, regardless of the entity structure.
Okay. Yeah. It's the only way to know. At the end of the day, really is the only way to know how your business is doing.
How do you when should, let's say, so I'm growing my business, when should a small and medium business consider outsourcing their finance?
Oh, this is a good one.
Yeah, that's interesting, and I think there's different answers to that at different sizes. But I think, I told you that I think that the 90-day cash flow forecast is the most important thing. I think you should have somebody who's got a skill set who can help you build that out from day one. If you can't do it, you need somebody to advise you, and that doesn't have to be a huge lift. That can be an hour or two of somebody's time a month. Build it and then walk it through with you, maybe 30 minutes a month. As a business owner, critical. Certainly need that from day one. You either need to be able to do it or you need to hire somebody who can help you. But then as you scale, I think there's a few layers of service. There's the day-to-day transactions that you need help with. And then as your business gets more complex, and do you need help with capital allocation? Do you need help making strategic decisions? That's where you might need something beyond just the day-to-day accounting, the bookkeeping level. So it's sort of a spectrum as your business grows and levels of complexity. If you find, I would also say, if you think you can do a quick calculation of how much time and energy am I spending on accounting, and am I doing a good job, and am I getting actionable data? If you put those into a bucket and say, I'm spending a lot of time and I'm not getting great actionable data,
maybe it's time to ask for some help.
Maybe it's time to ask for some help, and especially if I could use those hours effectively to grow the top line.
Yeah.
If you can
reallocate
your
a great
energy.
book by Ben Hardy says in Who Not How and Dan Sullivan, and so I want to know how it works. But now I'm to the point where I don't necessarily want to do it, but I do like my dashboards. I want to know.
Oh yeah.
But it's it's who's my who. So y'all would be somebody's who.
Yeah.
Right.
Yes.
Yeah. Absolutely.
And we love doing it. That is why we do what we do.
And you're performing in what Dan Sullivan calls your unique ability. Like, so your unique ability as a business owner or a real estate investor is making money.
Yeah. The highest and best use of your time is probably not accounting, unless you're running an accounting business, and then maybe it is.
Even then, it's not doing the work.
Yeah.
Right.
So
even our firm has accounting people for the firm. You're doing accounting for our clients, and the firm has an accounting department for their accounting.
There you go.
The way I would look at it is figure out where all the time's going in terms of accounting, and pick out the pieces. You can do it a la carte. If you want to outsource it one piece that's just taking you a ton of time, that's where I'd start.
And that's probably going to be transaction level work. There's a lot of software out there. We help with that. There's an enormous amount of operational and efficiency tools available in the finance and accounting world at this point. help people wade through those, make the best decisions and what to use for their business. There's a lot of low cost solutions to help organize all that shoebox of
Do
data.
you have any favorites?
Well, so yes, we do. We have a tech stack that we work with for small businesses that we found to be pretty effective. But what I would say is that, you know, one of the other things we provide is we can come into your small business and we can look at where we do what we call an assessment, and we can say, all right, here's where you are today. Here's probably where best practices fall for the size and scale of your business. And here's sort of a roadmap of how to get there. And we can help you get there. We can help get those systems in place. Or if you want to just go and run with it and do it yourself,
we can give you the assessment.
Yeah, we can give you the assessment, tell you what to do. Here's your roadmap. And you can go execute.
Right.
But implementation is the lowest level of value, so I would use them. All right.
Yeah,
So,
I mean, that's true. There you go.
It takes a lot of time. You know, software systems take a lot of
because
time.
you gotta learn how to use the software. So it's not just software. You got I got somebody a bookkeeper using QuickBooks, and I'm like, all right, I'm looking at this stuff, and the nerd part of Curtis wants to understand it, but it's kind of below my pay grade. But I need to, just get here. How do I get my P&L? Like, I want to see my numbers every month, and I really want to get what you're talking about, Chris. I like to see it every week.
Yeah.
And that software allows you to do that,
And that's the thing. Like, that's where we need to be in business today.
Yeah.
You don't want to be keeping your financials on an Excel spreadsheet anymore.
Because you can't
that green paper,
Right.
So.
Oh yeah. Right. So let me ask you. So give me, and I want you to tell them how to find you and who you want to work with. So I want you to prepare to answer that question. But do you have any quick ROI, which wins an accounting finance team can implement? Like, what are some, like, all right, you can go in and give them like a quick win.
You
look at your stuff.
Bill payment. That's mine.
What's yours?
Document management and electronic bill payment.
Yeah.
Okay.
That's an easy win. If you're not, and I would piggyback off that and just to say, if there's one, automate. Anything you can automate, anywhere where there's manual processes and you can automate it, you're going to save a ton of time.
Yes.
I would also say the quickest ROI, and I'm just going to hammer it, 90-day cash flow forecast. It's going to give you so much understanding of your business. So important. And,
there are tools to help with that. There are applications out there that can help you build that framework. It's better to have a professional help you get it set up, but there are tools out there that you can work with.
The other thing that's high ROI, it's a little bit more intensive, but I do think that having a really strong understanding of the profit drivers of your business are, like, if it's a service line or a product, do you have visibility at the product level or service level to say this service is driving a lot of profit, that service is not, or this is a loss leader.
People they want to do what they like, but what does the market want?
Right.
Are you priced right? Are you, you're trying to be cheap? Like, I went to this thing with Myron Golden, says, listen, nobody. Or Dan Sullivan says there's no value to being the second, the cheapest, right? So if you can't be the cheapest, like Walmart, you want to move in the other direction.
And that's the thing. We deal with a lot of service-based businesses. So you're an individual selling your time, right? People often underprice their value and find that, can I really charge this hourly rate or whatever it may be? Pricing decisions are often done without sufficient data to make an effective decision. And when you get the understanding of your
security when you're pricing,
absolutely. But when you really understand the costs, you get
I go through that. I'm working on some programs right now, and it's like, oh, can they afford? Is it? So I get that, right? Yeah. And other people, no, dude, you're worth way more than that, And I don't see it because a lot of times people will say, well, this is it. It's like, if you're performing your unique ability, it's easy to me.
Yeah, absolutely.
And I do value it because
what they're paying for is not your time today. It's the decades you took to figure out how to do it. If it takes you 30 minutes, it took you 20 years to figure out how to do it in 30 minutes.
Right.
Yeah.
Right.
Yeah. That's a very, and
so hear that. Like, I want y'all to hear that, your listeners. That's
value yourself. You've got skills. If you're making pricing decisions, you offer value, and and I think people should be charging more generally across the board.
Even when you're selling a product, you going
Yeah.
back to that Mary Kay example, you're selling a product. There's time involved in selling the product. You're going to people's homes, calling them on the phone, having the parties, all of these things that go into to generating the sale of that item. There's time, and that time has a cost to it as well. So even if you're not just selling a service, you have to factor your labor cost of it's only you in the business.
Oh yeah.
Into the price of that item. If you say, hey, I want to mark this up 50%, I'm going to sell this $50 item for $100, but I just spent 7 hours to sell that. You
Yeah.
are not priced your product.
It also
Or
gets
on
back-
the same token, real estate investors that know how to do the work. That's a blessing and a curse,
Mhm.
because I'm going to fix it up and then I'll sell it. But you're really, when you add in your labor, you work
Yeah.
for minimum wage, and
So
it's not really a win.
You
It's
talk
not-
about paying yourself first. If you're taking X amount of dollars out, how many hours did you take to take that money out? I mean, if you calculate it out and your hourly rate isn't where you want to be, you got to make some decisions.
Right.
Do I outsource a piece of this work that I can push down to somebody else at a cheaper rate that I don't have to spend this time, or am I able to increase my pricing? How's it work? You got to pull one lever or another.
Yeah, I mean, looking at your numbers, I haven't seen you every time you say something, you make you think of something else. But I'm gonna so because looking at your Kira, the balance sheet, the P&L, I find that. Do you find, because you're the experts, people don't know most businesses don't know how to read their P&L or like their financial
especially
statements.
balance sheet, that it becomes a foreign language to them. They work
Tell them what a
together.
balance sheet is. Let's go back there. So I'm not going to assume they know what that is.
Oh, so
Sure.
a balance sheet is what you have and what you owe, and hopefully what you have is more than what you owe. And at the end of the day, the net of the two of those items is what your business is worth. And so on a very simple level. So, you've got assets, everything your business has, from the cash in the bank to the computers to any equipment used to generate your revenue. Anything you've paid in advance, something you've paid in advance would be something that you have. And then what you owe are loans, bills, all the bills for products, bills for utilities, bills for
yeah,
any
absolutely.
of that. Well, any loans you've taken out, which people really, everyday person doesn't really think about a loan a whole lot. They just think about that monthly payment. They don't really think about how long that might be or how much interest they're paying on that loan. So, understanding that is critical. It does work with the P&L, because the P&L, hopefully it's positive, and we're increasing that value to be able to cover those things that we owe, the liabilities.
Yeah, and I mean, I also piggyback, and there's a level of connectedness to it depending on the type of business you're in. If you're a service-based business, a lot of your profit drivers run through the P&L. It's people, right? If you're in real estate, your capital assets are what's generating profit for you. So there's an interplay with the balance sheet where you're holding, okay, these are the properties I own. This is the debt service I have on it. Here's the cash I have. Here's the capital expenditures, CapEx spending I expect to have in the next couple of years. There is an interplay between what you owe and what you have, and then your ongoing profit and loss, depending on the type of business.
And I find people don't know the correlation between those two, right?
Yeah.
So I'm going to bring this down to a personal finance level. So the P&L is your budget. Here's what's coming in. Here's what's going out, right?
Right.
So when I say pay yourself first, I mean save, right? So because savings is the only way where you drive capital to the asset column.
Yes.
Correct.
Don't spend everything you make.
Right. Everything you make, right? So you gotta capitalize, you gotta have capital. I try to define the asset. I use the rich dad definition of something that pays you to own it. So if you study successful people, they focused on generating revenue and cash flow from the asset column because it's more favorably taxed, right? And then what people don't realize is that, and then what they'll do is, I got a person I was talking to yesterday. So she's got like 200,000 of student loan debt, and she wanted to pay $5,000 a month on the student loan debt. I was like, are you crazy? Right? Because because what they don't see. So if you look at the balance sheet, right, there's two sides of the game, right? Because everything
Absolutely.
that's your liability is the other person's asset.
That's
Your
correct.
expense is somebody else's income. And
Mhm.
I think sometimes I'll try to draw it side by side. So if you're a real estate investor, your rental income is your tenant's rental expense,
Correct.
right?
Correct.
Your cell phone bill is Sprint's
Yeah.
Revenue.
income, right?
And I don't know if this is the right framework, but I've always thought of it as at the personal level as, you know, the more you can put your cash coming in into assets that either hold their value or appreciate in value or
Yeah,
generate income, the better you're doing.
yeah, yeah.
And
And it goes
so,
back to me, it boils it back to accounting.
mhm,
Okay. You know
Yeah.
what I mean? Of the numbers tell a story, and do you know the story your numbers are telling you?
right, right,
So y'all see I'm a big
absolutely.
fan of what y'all do, right?
It's
And
it tells a story of where all the cash is going and where it's been and hopefully where it's going. Um,
and are you keeping it? How much are you
yeah,
keeping it,
Are
and
you-
how hard it works for you, right?
yeah.
And that's so guys, tell them. Yeah, I can talk about this all day, as you can see. The um tell them a little bit about what y'all do, how you help people, and if they want to follow you or get in touch with you,
Sure.
they need help with this stuff. Who should be calling you, and how can they reach you?
Right. So we like to work with small to medium sized businesses, preferably in the service based industry.
Hmm.
But what we're going to do if you want to talk to us is we're going to come in, probably start with an assessment. I talked about it briefly, but what we're going to
Hmm.
do is come in and see where you are today. Processes, your reporting, all your compliance, just the overall finances of the business operations, and say, here's where you are, here's where we want to get you, and here's the roadmap. And then, ideally, if you want to come work with us, we're going to help you get there. Um, then what we're going to do,
Story too. I mean, I
yeah,
think it's really important to point out. I'm so sorry to interrupt, but part of that assessment is learning your story. We don't. It's not just coming in and doing some sort of mechanical look at everything. We get to know you. We get to know what got you where you are, and get to know where you want to go. And so that assessment gives us the where you are, and then when we know where you want to go, we can help
yeah,
you get there. That is what really drives our passion, I think, is
yeah.
helping people get where they want to go and getting such a great sense of satisfaction out of that.
Yeah. And I just finish up to say that, once we have you, moving along, business is humming, we want to be your trusted advisor that
Mhm.
we help you understand your business from a finance perspective and help you make actionable decisions. Like, uh,
In a very cost effective way. A
yeah,
finance department, an accounting department in business can be extremely expensive. So, we add value without adding all the expense of having an entire
yeah.
finance
When you
department.
look at it in a fractional way, if you get a fractional CFO, I mean, a full-time CFO, depending on the size of the business, if it's a $20 million business, you're going to be paying $300,000-$400,000 in salary plus fringe. You can get a fraction, a fraction of our time, but certainly a fraction of the cost. And so you can get access to that, as well as access to the firm overall,
Right.
which has over 100 people in it. It's nice to be able to bounce a lot of ideas off of a lot of other experts who have a lot of other areas of
Hmm.
expertise,
Hmm.
Mhm.
Hmm.
and not just be relying on myself as a solo practitioner. So, to the extent that that's of value to anybody who's interested, you can come find us at KWC Advisors. You can book some time with us to chat. Love to help you. Love to understand a little bit more about the businesses that you may run, and see where we can add some value. Yeah.
Find us on our personal LinkedIn pages as well. Our firm has a LinkedIn page as well. You could find us on there, drop a note there, and we'll get to us one way or the other. But yeah, we certainly have our sweet spot for what we look to work with, but we're happy to have a conversation with anybody, get to know you, love to hear people's stories and, where we might be able to help.
Okay. That sounds great. I think so. We're going to I've got your LinkedIn stuff, and I think the
Mhm.
website in my notes here. So we'll put them
Perfect.
in the show notes. And
Perfect.
guys, so here's what I'll leave you with. Take your money seriously. Okay. And because the numbers tell a story. And so if you don't know, and so I'm going to tell you in like 5-10 minutes, they could tell you if you're going to have a happy ending to the story or are you ready to crash and burn, right? And so you need an intervention before that.
Yeah.
And that's really the power of this conversation in my mind.
If you don't know your numbers, you should know your numbers. That's the point.
Yes, because you're heading for a cliff and you don't know
Mhm.
it. Right?
Absolutely.
So, all those cliffs challenges, and then we help you overcome those challenges.
Yeah.
There you go.
The obstacle is the way, I've heard.
Yes.
I had that book. Yep. So, Kira, Chris, thank you so much for being a guest on the Practical Wealth Show. This was
Thanks
awesome.
so
It was
much.
a lot of fun for me.
Absolutely. We enjoy it. We really love talking about this stuff. So to find like-minded people, we're super excited.
It's great. Yeah.
Yeah. All right, guys. So listen, go out, listen. If you like this episode, leave us a review. Share this with somebody that needs to hear this and meet these guys. And they will thank you. All right. Chris, Kara, thank you so much.
Thank you.
Thank you so much. I really appreciate it.
My pleasure. So guys, go out there and make it a profitable day. Thanks for listening to the Practical Wealth Show.